Welcome to today's feature presentation, Trading and Investing Imperatives. In this presentation, we want to clarify what is needed for trading and investing success. The difference between trading and investing is just in the time of holding a position open. Behavior-wise, preparation, all is the same. And I'll give you qualified examples for this. Let us start out with some facts and figures of who the retail traders and investors are and what type of accounts they hold. About 80 million people hold IRA 401k accounts, where the majority, about 54 million, are in 401k accounts. That's all for retirement funding, and only about 5 million of those IRA investors in particular, they try to control the financial destiny on their own. Everybody else usually leaves it up to the money manager and their recommendation. Yeah. On the other hand, trading accounts, about 25 million online trading accounts, where about 5 million people trade frequently in the US. So traders trying to control their financial destiny. So that's the basis we talk about, and now we'll see how they in average perform. Let us start out with the IRA 401k. 95% of the private investors barely make it to come to the index, like the S&P 500, growth stocks, Dow, Nasdaq, Russell, or any others. So that's not a super duper perfect result, and I show you some examples of how that pans out. And of the trading accounts here, those 5 million traders that trade frequently, 76% unfortunately lose money, and we hope we can contribute to make a change to this. To put proof to this, I'm comparing here the Fidelity Investment Fund for software and IT services to the S&P 500. So the S&P 500 over the last 6 months is that pink curve crawling up, and now I compare at today when I record this, how did the index and Fidelity perform. So they're both up, that's positive, but the difference is if you had made just an average market investment, you would be 3.1% up, or compared to the average market, the Fidelity Software and IT Fund is 3% down. So it means you could have done better, but the question is that the right relation, comparing it to the average market, because we all know that technology was thriving. In the next step here, I'm comparing the Fidelity Software and IT Fund to the technology sector spider XLK. And there you see a much wider difference, at 9.2% underperforming on the rate of 6 months. So could you have done better? Absolutely. And I'll show you how you can make a change to this. The more frightening news is that 76% of the frequent traders lose money, and that's definitely a bad result. And you might ask yourself where we got that number from. We made a whole study on that, and in that study the brokers even allowed copy trades. So the ones who performed best, you could copy their trades, but still no good results was achieved. But why is that? Because you can copy the entries but not the exits and the stops. So there in between lies the truth, and I show you how you can make a difference within, first of all, finding good trading opportunities, defining them with the entry and the stop level, and executing the right orders. If you want to obtain the background of that study that 76% of the frequent traders lose money, write us an email to contact@neverlosstrading, subject 76%, and I'll send you the details. My name is Thomas Barman. I'm your presenter today, and I want to make you aware of the risk in trading, that I'm here as a trader and educator, not as a broker dealer or financial advisor. And also a little disclaimer, never lost trading is not a promise to never lose a trade. It comes from the concept of repairing a trade, but never stop loss trading was a bit lengthy. Back to the question, what is needed to make long-term trading and investing success? And I can answer threefold. First of all, the system, giving you mechanical entries, exit, stops, strategies so that you can limit your risk in trading so that you're not having drawdowns, and discipline, good preparation for being prepared day by day, hour by hour, for making the right decisions in the financial markets. Let us put it on a chart for you. That's our trading chart using Never Lost Trading Top Line, our top of the line product, and the ones which we feature the most and we had the most success with our clients here. So you see a trade situation. Let me highlight it here. So a buy threshold was formulated, buy above 32.49, and that means in the next candle this price threshold has to be surpassed, which it did, and then we formulate a target. Yeah, so target on this one was a 2 SPU. We always measure SPU, that's the minimum unit we wanted to move, and then we scale out those trades. And so this is what happened. Yeah, when we go back and look at the details and compare where entry and exit was for the trade, then we came to a 4.5% return on cash, basically in a matter of a day, because entry and exit was there. So this is when you trade it mechanically to that target. What you also can do is to trail your stop, so then you would still be in a trade, but we are right now in front of the earnings declarations of Apple, and sure, it can gap up or it can gap down tomorrow, but we want to be risk limited in our trading, so an appropriate strategy would have to be chosen instead of just leaving it up to the result that Apple brings in, if you win or if you lose. But here you won already into the earnings within making the trade when it was announced by the system indicator, and you followed through here. All happened in one day. 4.5% return on cash, that's 9% return on margin in a matter of one day. That's definitely a success. Financials had a hype, but where was the entry? And the same again here, January 6, we had the announcement, if the price goes above 132.77, there is a good chance that it goes to our target 2, and it did. Yeah, so this is how we carried out the trade. And then we had here a national warning, or warning here for JP Morgan. If the price drops below 139.33, then it's going to be most likely dropping down here to that line, which we call a box line. But so you see, the chart will tell when to buy or sell, when to enter a position, how long to hold, and when to exit the position again. That makes a key difference to trading, because if you only know when to enter, you might have entered here somewhere, and now you find yourself here being stopped and making a loss. This is what we try to prevent. Therefore, we give you clear-cut mechanical rules when to enter, when to exit, and how to execute your orders. In this example, we produced a 3% return on cash in a matter of 5 days, or here a 6% return on margin. Yeah, and the key is we know when to enter and we know when to exit to prevent those downdrafts. On the other hand, now we want to go into day trading and give you an example. Day trading is a different discipline because decisions sometimes go fast, and here we want to show you a concept of how to make your actions less predictable. Yeah, how to first of all get into evolving price patterns to the up or to the downside, and also how to prevent getting stopped, because a lot of stops are time based where price accumulated, and that's often aggravating when the price comes to your stop, takes you out, and then continues and commences in the direction you desired. So therefore we look today at a transactional chart, and also want to show that our systems, independent from time, transaction, range, always show repetitive signals over and over that you can spot and follow. Yeah, so therefore we always follow a predefined price distance, which we call the SPU, a speed unit, and for some of them we go for 2 speed units. And what I show you here then on that chart, there will also be price conglomeration lines, or we call them price gravitation lines, lime lines, that are on the chart where you see where the price likes to gravitate from and gravitate to between those lines. Magnifying into the chart, we see the following. Yeah, so we have certain situation where we have spelled out price thresholds, as I showed you in the 2 swing trading examples, but also what we have on here are these what we call price gravitation lines, or lime lines, where we spell out a center lime line, a satellite lime line down here, and we have even a second satellite lime line. They specify where the price likes to go to, and that helps for dragging out the trades further. So you saw here, immediately after the open, we gravitated towards that line, made a 2 SPU price move, that's here about 9 points, $450, and then concluded. Coming to the next, we had another opportunity right here, doing this for again $450 at one contract trading, and then moved on all the way to the line, broke down, and you can follow these systems, and I'll show you step by step how the system spells out the price thresholds, and we look at the results, because we not always win, we get stopped also, but we have high probability trade setups, and that's what you will see. Because here, situation 1 on the blue signal, there was a winner, next candle ticked it out, the stops underneath that candle here, that came home. Here, second situation, sell order, ticked out, stop was up here, this came home even with an extended target all the way down to 3825, and then we have a continuation pattern where we do this again and again and again, coming to the next opportunity here and here. I quickly can go over. You see the stop would be above that candle. You followed through for 2 spoos, and we did that again here, extending the price move to the downside. When prices reversed, situation 5, here we had our entry, and it took a while to come to target, but that's a transactional trade. The while was not that long, it was between 11:20 and here we came to target at about 12 noonish. Yeah? So this is how you use that chart. And there's more trade situations here, opposite directional trade, coming into target, trying to reverse. This one was a loser, yeah, because here we got stopped, so price action came back, and then we had a situation again back in the day at like 1300, so that means 1 p.m. East, and where we concluded with a 2 spook gain, and that's where the prices came off. So this is how our systems work. They do repetitive orders and opportunities over and over, and we want to invite you in being a trader who knows the entry, the exit, the stop, and where price situations are that you can spot and follow. We are teaching our systems, our strategies, the trade finder, trade repair, money management, business plan concept, account management. What does that mean, account management? We work with you so that your 401k, your IRA, your margin account or short-term trading account, they can all be managed with the same system within clear-cut rules, where to enter, where to exit, and how to execute those orders. We work one-on-one only at your best available time, also at weekends, where we train you and work with you to help you to make that transition to being a consistent trader. Make a difference to your trading and schedule a consulting hour with us, where we show you live what our systems can do for you and how we can tailor make them to your individual need. Call us at 866-455-4520 or contact at neverlosttrading.com, subject consulting hour. We are more than 10 years in business with Never Lost Trading, and our algorithms helped many traders to get independent that worked with us over the years. So again, we offer you a personal consulting hour, so contact at neverlosttrading.com, and we are looking forward to hearing back from you. Thank you very much. Bye-bye.